Farm4Profit Podcast. Take a listen, have a blast. Farm4Profit Podcast. Learn about farming while having a laugh. Farm4Profit Podcast.
Well, this is exciting, Corey, to have two CPAs to be able to discuss the topics that we want to talk about today. Are you intimidated?
A little bit. A little bit. I mean, I'm always intimidated just on this topic, period, because I know inherently they're going to be like, "Oh, where are you sitting?" I'm like, and I'm going to tell you guys right now, it's a crap show. And in fact, my CPA had a stroke. And he is okay, but it happened about 3 or 4 weeks ago during harvest, and then that shock of like, oh, yikes, and he's a one CPA firm, and it's like that is kind of scary, getting close to retirement. So I need to start with some redundancy of myself and finding something else. So
if Dave was here, we'd start the bidding for Corey's business.
Yeah.
Let's start with you, Hannah. What is a new update for this tax year compared to the last tax year? What's something that sticks out for you that is potentially going to be something to pay attention to?
I really think the thing to pay attention to is the things that stayed. So qualified business income deduction stayed. And I often have clients, I've gotten mind trained now where they understand what I'm talking about, and they often use the term, which is like super cool. But, there's a 20% tax deduction just for taking in income, and that stayed. Like that can be huge. You know what I mean? Like you have clients and they get up into those higher tax brackets. That's such a good strategy, right? Like in that is a component of wages. Well, if you have S Corp owners, you can just, instead of kicking them out distributions, increase those wages. We keep under the reasonable compensation, of course, but you can play with that formula so much. And I've had clients, we save 300, 400,000 with a QBI deduction just by massaging the wage component of that. So, and a lot of clients just don't really understand that. And that's not on them to understand, right? We start looking at year end and figuring out QBI and looking at that 20% limitation. And then, once they get between like 400,000 to 500,000, it starts phasing depending on the year, right? This adjusts for inflation. So it starts phasing. And so when you could pick up on, oh, they're losing deduction because they don't have wages, or they don't have, equipment, essentially, the equipment component is only 2.5%. So it's a low component if it starts to factor. In my experience, almost all the time, wages are way easier to get that deduction up. And so I think that's like a good thing for people to keep on their radar. There's some good things in the tax planning and the new things, the OBBA, OBA, whatever we're calling it now. I like the Trump accounts, right? At first I was like, oh, I don't know that these are really practical. But then when you start to unpack like the final, what they're going to do, I think that's a great way to build like generational wealth, right? You can sock away 5,000 now, and then your kids retire as millionaires all because you put away $5,000 when they were little. Like that's pretty cool. Another great thing, I think, is the FSA payment limitations, right? They're adjusting those. So now S Corps operate like general partnerships. And so like that's one thing we always keep on the radar. General partnerships are great. Essentially, for listeners at home, that might not be aware of this, general partners kind of have unlimited payments. So like the FSA, but for operators, and you have to have, right hand, left hand. It's really complicated, but at the end of the day, general partnerships are almost always better. And now with the OBA rules, they're going to have a transition period, of course, but now S Corps can be treated like partnerships, which just kind of like levels the playing field, right? And so that'll be good for a lot of clients.
Meet Maya Cornheads, built better for over 40 years to power through down corn, high yields, and tough fields without flinching.
These durable, low-maintenance heads mean less downtime, less grain loss, and more profit per acre. They have the option for down corn attachments or direct-driven chopping. They ensure that your combine will move smoothly, fast, and full at all times.
Don't just harvest your fields, conquer them. Visit MayaCornheads.com to find the dealer near you.
I don't know if we've ever heard of OBA. UBA.
No.
You said triple O? It's got to be like UBA.
No, OBBA. So some people call it that. Yeah, OBBA.
That's why the
or
B's are
OBA.
hard.
What do you
Yeah.
call it, Mackenzie?
So our director of tax calls it OB3. He's a big Star Wars guy, so he calls it OB3.
Okay, we'll call it OB3. That sounds cool.
OB3.
So do the Trump accounts?
Yeah.
Does that coincide with what we've talked about in past tax episodes about being able to pay your, I'm using air quotes, pay your farm labor, your business
Kids.
labor to your kids into that same, that they don't have to consider that as taxable income?
Okay, so you're talking about paying your children if you're a sole proprietorship or a general partnership where both parents are the only partners. You're talking about this component. Yep. So you can kick out, $14,000, $15,000, and that's adjusted for inflation too, to your kids. And then in theory, what we do with clients is that's earned income. So then you can put that into a Roth and sock away money there. So this is different. These Trump accounts, you don't have to have earned income, obviously, because they're mainly for 5 years and under, I believe. Right, Mackenzie?
You have to be born this year going forward. That's the biggest thing I've seen.
Yes.
So yeah, that's the biggest difference on looking at it from the taxpayer perspective. It's ones that are going to have kids going forward. So still back to paying your wages to your children and putting in the Roth is the best option for people that already have kids.
Got it.
Yes. So this is ones, and it's only before July 4th of 2026, right? That's when you can first put money into those Trump accounts.
Sounds like we need to get busy. Is it physically possible? We can't.
Let's see. This show comes out at the beginning of December.
Maybe special.
You could adopt.
Tax baby. Oh.
Hey, there's adoption credits. There's
go.
better credits for adoption this year.
All right. That got uncomfortable. We'll move on to the next one. Thanks for those insights, Hannah. What about you, Mackenzie? What are some favorites as updates?
So I guess I would agree on like what stayed, tax rate staying. So we're at the lowest tax brackets we've ever had in history, really, or at least the last 50 years. So that was one big thing we'd been planning for going into this year was what's the bill going to be? And if tax rates, they were set to go up quite a bit the end of this year. And so having the tax rate stay where it is has a lot of planning opportunities for farmers. And utilizing the 12% tax bracket is one of the biggest things that a lot of even small farmers can do. If you can pay 12% historically on your farm profits year after year, you're winning there. So getting people to do that and not think that zero tax is always the option. But
it's
also
the only option.
Yeah, right.
Right, Corey?
Yeah. Well, a lot of people think that.
Right.
Usually when you're paying tax, it means you made money.
Right.
Right.
The other thing that's probably one of the biggest windfalls that farmers are really going to like is bonus depreciation's back at 100%. So you can elect 40% this year or 100%, and then going forward it will be 100%. So those new Sukup steel buildings you guys just had a show about, those are now 100% deductible.
She listened on the ride up here.
I listen frequently. So
was that in the big beautiful bill that came through?
Yes.
Okay, and then. Can we buy airplanes on that too now? I was in an airplane earlier. This
is it if it's
for business
purpose,
right,
yes.
Okay.
And aircrafts have some special depreciation rules for themselves.
Now, my wife just sent me a Grant Cardone post that said everything is a business purpose, including family vacations, as long as you have board meetings and a scheduled agenda and you take minutes, track your notes.
There's some truth to that.
I mean, you are probably the person that could actually do this because I do get Snapchats of you of like the kids doing this or that.
Oh, yeah.
And
and
probably have it scheduled down.
My oldest is now an audio editor, which is
That's awesome.
super cool and legitimized. In the past, in order to get around some of this, we've had them come do radio ads and podcast ads and
clean the studio.
Right.
Build this.
Yeah.
You build this.
We're trying to legitimize.
Yep.
Right, Hannah? That's what matters. Proof does.
Yeah. Business purpose. And also you could bookend, right? So do something business on a Friday, business on a Monday, play on the weekend. Counts. Travel
Ah.
days count as business time, so it counts.
When they say this big beautiful bill comes out and all this stuff, like, is that for this tax year or is that for 26?
So it's all. So
It just
there's some things for 25 that are
Okay.
in place, and then there's some things that start in 26 going forward. There's also things that are expiring at the end of 26. So like solar tax credits, I think we're going to maybe talk on later.
Yep.
Those would be something that's going away with the
Okay.
new bill.
Is there ever anything that they come out with that you could actually go back and edit?
Occasionally there has been in the
Yeah.
past, not with, I don't think OB3 had anything currently, but in the past there have been things where it's like March 1st and we still don't know what section 179 or bonus depreciation limits are for the prior year. And so all of those March 1st farmers are going, do we extend? We're encouraging more and more 115 payments. So if you didn't know, if you're a farmer, there's specific rules to qualify as a farmer. But if you are a farmer, you can pay your tax on, or at least 2/3 of your tax on January 15th. And then you have till April 15th to file your return.
Because otherwise it's typically the 28th of February?
March 1st.
March 1st. Okay.
March 1st. And so we're encouraging more and more farmers to do that, just with, as people are diversifying and getting more investment income. A lot of those statements don't come out till the 28th of February. If there's years that we don't know what the tax law is going to be and we're coming down to the wire, Iowa has been one of the pain points in the past on, are they going to conform to anything changing wise on federal? So there's been years for us, we've been waiting for Iowa legislators to finalize their tax law. So just to simplify it and not make it stressful, if you pay 2/3 of your tax by January 15th, you get till April 15th to file your return.
Now, if you're going to do that, you have to know what 2/3 of your tax is going to be.
Yeah.
And that's probably part of this conversation where good record keeping is important.
Yes.
What do you advise your clients, Hannah, on the record keeping side as far as tools go and ways to where they can make this easier on you?
Yeah. Honestly, I think the biggest thing is having clients keep their books. I mean, so you have clients out there that they are so head in the sand when it comes to their record keeping. They literally have their bank statements sent to their accountant. Like, that's super old school, like paper bank statements. They still are doing that in this day and age. And that just like blows my mind. One, because the accountant's just doing things as a means to an end, right? Like cash basis, which is most farmers. So deposits in before year end and then expenses paid before year end, right? And so it's just on an annual basis. But as we all know, that's not how ag works, right? A lot of times you're not taking in the prior income to the following year. Meanwhile, you're prepaying expenses for the next crop. And so a Schedule F never really actually shows profit. And so I think the biggest thing with clients is finding a solution that they like to use, right? Time and time again, clients tell me QuickBooks Online is a means to an end. I do it because I think that's what it takes to work with you. And so I actually had a moment in tax season where I was reading the book 10x is greater than 2x. And I thought my 10x was going to be
tax season.
So my office is 45 miles from my house. And so I just listen to books and podcasts and you know what I mean? And so, I mean, you drive to your work or you drive to your cows. We chose to drive to our jobs. You know what I mean? Yep. And so, yeah, I was listening to that book and I was like, all right, I think I'm going to create my own software, right? Because the hang up often in tax season is clients do their own books. They're not really sure what they're doing, right? They can be dumping all of their cattle income into livestock sales. And it's like, that doesn't work, right? We got to know, did you raise these calves? Did you buy, like, are these stocker feeders? Did you buy these? You know what I mean? And so in tax season, I actually had a client and they had a bookkeeper, right? Like they hired somebody to do a bookkeeper. It was a bookkeeping firm. I was just doing like tax strategy, tax prep, and that bookkeeper forgot cost of cattle and they're a stocker feeder. And so I'm like, what was your year-end inventory? And the client was like, I don't know. Right. And so I, of course, being an accountant, at heart, we're technicians, right? So I created this like mind-blowing spreadsheet tracking all the lots, when they bought them, when they sold them, like each tab for each lot. And then I also had their feed broken down like per lot. And so like I did my own like break evens, right? And so I sent it to the client. They text me the next morning at like 5 a.m. and he's like, awesome spreadsheet, bravo. And I was like, this is going to be a software, right? So I started like unpacking what it takes to actually build software. And I was like, I'm not being night janitor on my software after working all day. In Ambrook, actually, there's an operation, the Bieber Ranch. It's in South Dakota, and they had this cute reel. And it's a husband wife, and like they were talking about the typical dynamic of husband wife, receipt tracking, all the things. And I was like, man, maybe this software company gets it. So I reach out, right? I apply for their demo or whatever, and a real live human emails me. When I was like, okay, this could be like great if I have access to like real live humans who are writing the software. And so I took this client and I dumped their entire prior year into Ambrook as like a test case, right? Like how does this software actually work? I'm starting with 0 anyway. I have my spreadsheet so I can fact check Ambrook. Like I know what this is at year end. I know the break evens. I know the cost per head. And so I'm just going to fact check it with Ambrook. And so I dumped a bunch of time into it. And it honestly is way simpler than I was making it, right? Now I've learned all the tips and tricks and the automations. But the one thing with Ambrook is until Q1, they don't connect with Premier Farm Credit. They're going to. And with this new open banking policy, like soon banking stuff is going to get way easier. But anyway, so I get that one done. And meanwhile, like I am on Google Meets with the people that write this software. Like I'm on there with the co-founders, I'm on there with the engineers, right? And we're like running through it, testing it. And there was one day where I accidentally imported, and Premier Farm debits or credits or debits, like they're kind of backwards of most banking. And I imported 1,800 transactions that were flipped. And so I emailed the team and I was like, hey, I just broke it. And by 1 o'clock in the afternoon, they had flipped it. Like they fixed what I did, but then we're already in the process of making the software recognize when that was going to happen. And so the software would pick up like, hey, we see that you have checks that are like going to be deposits. Are you sure you want to do this? And so it gives you the chance before you break it. Honestly, the customer service is what really drove me on Ambrook. I don't know about you, Mackenzie, if you've ever dealt with like QuickBooks or QuickBooks Online. I think Intuit I used to love Intuit because we had our pro advisor phone number. So we get a US based person starting about 3 years ago. When we call on that same phone number, it's routed overseas at 3 o'clock in the afternoon, and there's roosters on the other line. And I asked, like, is that roosters in the background? And she was like, yeah, the sun's coming up here. And so they just like totally offshored all their customer service. And so it's just been a battle, right? And QuickBooks wasn't built for ag, like in any way, shape, or form. The big thing I like with Ambrook is like I have an operator in the beginning of the year. We say, okay, of your feed costs, what percentage is this cow calf? What is for your leased cattle? What is for your stocker feeder? And we break down like all these bigger expense categories. And then we teach Ambrook. Like when you see Frenchman Valley Co-op, you put 70% to cow calf, you put 20% to leased cattle, and then you put like 10% stocker feeder. And then once this bank will automatically connect to Premier Farm, which will happen Q1. Mackenzie and I were on a call and we were talking about that. She's one of the co-founders, right? And so that is just incredible, right? For it to be doing the bookkeeping, you have control of it. Also within Ambrook, let's say you don't have automation set up. You can like look in the ledger for everything ACH'd and like give it a name, right? And it'll pop up with all the transactions that the bank feed sees with that name. You can select them all and tag them from there. Like you can say all of these transactions to H&R Tire, to a fuel company, whatever, and you can tell it, tag all of these to this tag, which is how they categorize transactions. You can tell it which location, You can tell it which enterprise, right? Like you can do things so quickly where QuickBooks, like, yes, they have classes, which is expensive to have that software that can do classes, but then you spend so much time like putting things into classes. It's not, the juice is not worth the squeeze, right? Where Ambrook can do this so seamlessly, it makes it worth it, right? And you're seeing a lot of operators that are really into this enterprising. And I get it. And it's, you know what I mean? A software that allows it, that isn't a ton of spreadsheets. It kind of can run on its own. It also is like built, like Ambrook has the app. I'm sure I think there was an episode where you were talking about it, Corey, like the
Yeah.
app, you had gotten it.
We did.
Yeah.
We were able to dive into that, and I don't know if I like the sounds of this because I really love spreadsheets. I sent Corey, we'd co-own the building that the studio's in together, which is neat because when you talk about enterprises, it allows you to, have your farm and then have your businesses and then have your real estate business and be able to segment all of those out. But this property is still in a spreadsheet, and it's apparently backwards to Corey.
It is backwards.
It's not backwards.
Yeah, it is. You put the top, it should go down, and you go.
No, the most recent date is at the top.
Yeah, no, that you calculate down.
See, right? It's nice to know that there are tools out there. But for you, Mackenzie, when you look at your top tier of clients that come in, is there a difference in the way that they keep track of their records?
100%. So I'd say most of the top tier clients that we're working with, a lot of them have the on-farm bookkeeper. So I 100% agree, Hannah, on the client doing the bookkeeping, because we do bookkeeping and happy to do bookkeeping for clients. It's on the tax basis, and if that gets you what you need, 100%. If you can get an on-farm bookkeeper for your operation, they're going to know when the bill's coming in, like what field this went to, how many acres you applied it to, where the bushel, which field it came from, more on the enterprise types of things. And as we're looking at farmers, I was listening to one of your other episodes this morning on my drive here. And as you're looking at enterprise and diversification to help make a profit going forward, you need to look at yourself as wearing different hats. So if you've got a livestock operation, making sure is that profitable? Are you making money? Is your grain operation? And there's probably tractors you're sharing between the two. So how do you assign the costs between those? And are you looking at that from your tax return is going to be tax basis, and you're going to have 179 depreciation. Well, that's actually not your cost of production because you might have wrote off that tractor this year. So looking at your costs in an accrual basis environment and understanding the profit by year and each thing you do. So do you custom spray for people, and what are your costs for that? And what do you need to charge? Because I would guarantee a lot of the people doing custom work out there are going on the Iowa State.
I was going to say, someone tells
survey.
us what we can charge.
Yeah. And so it's like, does it make sense to really do that? If you can only charge $16 an acre for ripping, does that cover all of your costs? And if you're losing money continually every year at what you can charge based on the Iowa State custom survey, then why are you doing that?
And the one that sneaks up on you there is if you are in relatively newer equipment, the cost of depreciation on that asset. And it's hard to get through your mind, what that hour is worth.
Yes.
The wear and tear.
Especially like if you have to pay someone, if you don't have time because you're diversified in too many things, and now you're paying payroll costs on top of that, and what's that extra hour of labor costs you in the long run? The more you can segment out all of those, even like if you own the farmland versus renting farmland, there's a cost, and you're actually a landlord too on top of a producer. And so making sure you're paying yourself rent, or if you have cattle, you get the manure off of it. That's a cost that you have that you're not writing a check for, but making sure you understand the back and forth, and that your livestock operation is really more profitable because you should have wrote a check over to that for the manure you got off of it.
It really feels like there's a lot of cost averaging, I will say, or robbing Peter to pay Paul in agriculture, and a lot of people will do it with like cash rent, I can pay a little bit more over here because I got, grandma's 80 over here that's really low. And then they average it. And is that right? I don't know. I think
there's places that, it makes sense. It's making sure that you
keep going.
Making sure that you have the data to understand what your true cost is at the end of the day. We have a lot of producers that say, well, I met with my banker. I know my cost of production. But do you really?
Right.
Did your banker look at your
Yeah.
accrual, what your book basis depreciation should have been? Did they factor in all of these different costs that you've got going between, or are they looking at your prepaids for the current year and different things like that? And are you able to make that best business decision for your operation? There's a lot of, also on the other podcast you guys had on, I think Life 3, is it Life
360?
Life 360? Life 6?
Wait. Like, oh, no.
Farm
Farm
640.
Farm
640.
640.
Life 360 is when Corey spies on me.
Yes, yes. No, Farm.
Say we're gonna have another podcast kind of like on that today. Yeah, I was gonna say that it's very important to work with someone that knows ag, because there is those years that one entity has to kind of lift up the other, but we know that the good is coming for that other one, right?
Yes, yeah. But if you can look back historically and see, for the last 5 years, I've been doing custom harvest and it's costing me this, and I'm losing 20 grand every year on this. Like, that helps you make good decisions on, really, should I continue doing this?
Yeah.
Or do I need to charge more, and can I get more? And what's that extra acre? He had talked about, and I would 100% agree on, there should be more partnerships out there between neighbors or relatives and stuff like that as we go through farming on, as equipment's costs are skyrocketing.
Mm-hmm.
So new combines, $1 million is pretty easy, and be able to add acres to your operation and knowing what that cost is for them is crucial going forward into agriculture.
Right.
So we know that record keeping is key, but this is a tax planning episode, and we've talked about a lot of things already, but one thing that I know we've been prepped about but haven't covered a lot is there's some credits available that maybe we haven't discussed on this podcast before, whether it's solar or energy efficient upgrades. We did a little bit of discussion in that category in regards to grants that are available, but we've never really covered credits. But then also there's credits if we want to try some new things, right?
Yep.
Tell us a little bit about one or the other or both of those, and we'll shift some of that to Hannah after the fact.
So one of the biggest things that came out of OB3 would be the increasing research activities credit. And so that has been huge. So the credit had changed slightly going into this year on that is now new to you. So it used to be the research activities credit used to be new to the world. So you had to be doing research to build a brand new product that no one's ever seen before. Well, now it's
the spreadsheet that Hannah was building.
Yes. So now it's new to you. And so that has changed the game on who qualifies for that credit. The credit is it's at increasing research credit though. So you need to it's looking at the 3-year average from previous years and then what you're doing in the current year. So this does apply to farmers. We've seen the sweet spot seems to be if you've got $500,000 of inputs between seed, chemicals, and fertilizer, that's when the credit starts to pay off. By the time you pay someone to do the research credit calculation, look at all your books and records. If you've got below 500,000 of input costs, the time it takes to calculate what the credit is offsets what the credit you're going to get. So with that, if you do John Deere Ops, that is a huge benefit to you because you've got a lot of the data of what you've been doing, what you've been trying. If you have a specific test field that you're trying new things on, that's a great advantage for you. The thing to look at is, are you doing strip till this year and you've never done it before? Are you planting, this is probably a little more gray, but are you planting 104-day corn instead of 113? What are you trying this year? I think probably this year, at least in our area, are you looking harder at fungicides and the application there? Because that's made a big difference in yields in a lot of farmers this year. So what are you looking at to try to innovate and improve your practices and being able to prove that to the IRS? So that's a huge credit for some of the larger farmers out there to look at. There's companies we partner with in doing those calculations and working with them to make sure that they qualify. The thing to think of there is it's an increasing credit. So you need to increase those costs, or there might be years that it just doesn't make sense. You might have had $500,000 of inputs for the year, but you took the credit last year and previously you weren't doing a lot of research. And so it's going to come in waves just depending on what your costs are every year.
What section is this?
I believe it's section 180.
No,
No.
that's
180
excess
is
fertility.
Excess fertility.
Oh, that's both Safra.
Yeah.
Yes.
Yeah.
Yes. So, so this is a credit.
This is a credit.
Section 179 is a deduction.
Correct.
Can we do
Oh.
both?
Yes, but you have to be careful. So if you do the increasing research activities credit, you cannot duplicate on there. So one of the other great things about OB3 is that you can make an election. So if you're under 22% in tax, I'd have to open my notes again, cut that. But there's an election you can take to say, I don't want to add back the cost. We'll just take a reduced credit.
Right.
And that's also crucial. It kind of depends. Again, work with your CPA on this because there's different factors on when you're having to add back those expenses that you took. Are you under the self-employment limit, and are you going to pay more self-employment tax and factoring that in? Also in Iowa, there's still tax on that. So looking at all of the different complexities there, but it is a credit directly on your federal income tax. And then looking at, do you want to add back the costs that were included in that credit? Or do you want to just take the reduced credit option and not have to worry about adding back all of those costs to your Schedule F farm?
Harvest season is here, and so is your competitive advantage.
That's right. The Estes XPR3 concaves are a total game changer. Think one concave, all crops, no bands, no switching. From wheat to corn, soybeans, you're rolling non-stop. Backed by their patented technology with 250% more threshing surface, you get cleaner grain, fewer fines, and beast-level capacity, all without trading combines.
If you're interested, visit EstesPerformanceConcaves.com to upgrade your combine today. Estes XPR3, harvest smarter, faster, and better.
So according to Gemini, it is Section 174. It is the
Yes.
research and experiment expenditures, which is closely tied to the R&D tax credit, which is Section 41. So
Right.
that's a mouthful.
So, Hannah, can you talk a little bit about credit versus deduction? Is there one I should be using before the other one? I mean, obviously, a credit you have to be making money to use, right?
That's one of the big things on the
Yeah.
R&D credit as well is like,
Yeah.
did you show a loss that year?
Yeah.
And making sure you have the tax to offset it. And it needs to be from the aggregate. Sorry, Hannah, to cut. I just
yeah.
jumped in there.
Yeah.
But you have to have income from the activity that generated the credit. So that might be wages to your spouse, but you have to have income tax to offset that credit.
Yeah. Credits are essentially paying tax on your behalf. And you have to be careful with credits as a broad overview, right? Like some are refundable, some are not refundable. So you have to be careful when you're like reaching for credits if it's actually going to be worth it. Deduction is just like an expense, right? Expenses are deductions, so they lower taxable income, and then tax is what you owe. Tax credits can offset the tax you owe. So yeah.
Right. But us as farmers oftentimes will abuse Section 179. I will
100%.
say, I don't want to pay Uncle Sam. I'm going to go buy a tractor or a combine that I probably don't need.
Right.
It's nice and shiny and has the new creature comforts, but a lot of times that's how that gets used, where maybe it should have been used on fertility for next year, seed, or something that you actually are going to need.
Well, and in that fact too, the R&D credit is on expenses you're incurring. So a lot of it's input costs. So you're already going to pay for those. So looking at that as a way and tool to minimize your tax is a great option versus you bought a new tractor, but you've got a loan on it. Let's maybe not write that off because you're going to be paying for it for the next 5 years and not get those. You're going to be paying for it in future years and not have the corresponding matching deduction there to help offset tax.
Oh, a lot.
I
Is
agree.
that something?
Go ahead.
Yeah.
Go
I was
ahead.
going to say, is that something, Hannah, that Ambrook can help me keep track of?
Your input costs?
Well, being able to identify if this is a new, can I flag that this is a new research or this is a new action? This is something that might qualify for this credit?
Mm-hmm. Mm-hmm. So often with those R&D credits, isn't it looking at like a specific field? Like there's a lot of back end stuff on that. So within Ambrook, you could tag per location. So then you could be like tipped off like, okay, fertilizer at this location is qualifying for this credit. You know what I mean?
Yep. I was hoping so. I assumed it had that ability.
Yeah. Yeah. I mean, you can go down to field level. You can, higher level is like corn, soybeans, cattle, and then cattle, stocker feeder, cow-calf, but you could go down all the way to field.
Okay, so R&D tax credits, we've covered that. Is there any other tax credit things that, I mean, I know you mentioned solar and
Solar would be huge right now. Solar's going away. So if you've thought about solar,
It's got to be huge right now. The number of freaking phone calls I get about, have you had your roofs measured? Have you had
is
your
that just
energy
because
audit?
they're like getting it? Well, obviously, if they sell those solar panels, they get it. But do they get a portion of that?
I don't know, but it is ridiculous.
but I can right now. So the credit's going away. You should be doing it this next year if you've ever thought about it. And right now in Iowa, you can get a REAP grant for it, so that helps offset some of the costs. And then, if you do it, you can take $179 on it. If you get a REAP grant for it, also check with your local utility provider, though. I would give that caveat on some of them will buy back the energy and others will not. So you can bank it for future use. Others won't let you do that. So that adds into the factor of the cost of the project.
We call that net metering.
Yeah. So if you can do it and get the REAP grant and bank your energy there, some of them we've seen it, you might only have out of pocket like 20% of the cost after depreciation, which is pretty incredible for some of the projects we've seen.
We've talked about doing it at the studio just so there's a buffer for when the rain hits the tin roof above us. Because if it was raining right now, we'd be shouting at each other. But no, that's good to know. Now, when these folks call, I can say, I understand why you're calling me over and over and over again. Hannah, anything else that we're missing as far as important tax news for our listeners as they go into their consideration for next year?
And you did mention Section 180. That's a tax credit as well, right? We have had shows on that.
Yeah, with BOA
It's not a tax credit. It's a tax deduction.
It's a deduction.
Yeah.
Okay.
Yep. And recently we've had some audits come across on those. And for the most part, IRS has, accountants have our own opinions on these things, but BOA SAFRA did a lot of them and IRS let it go. So.
And that's what they pride themselves on. I don't think they've ever lost an audit. That's the way that the tax law reads, and if that's how it's going to read, they don't like it, they probably should change it.
Have you ever actually read the code, though?
Have we?
Yeah.
Yeah.
Are you kidding? Do you look who you're talking to?
We don't read the outline.
So we at our firm, on the caveat of BOA SAFRA, I think that's something people should be looking at. We would argue it's not Section 180. Huh? That would be 1 year or expensing fertilizer in year one. So we would look at more of the depreciation rules of allocating that purchase price of the farm. So not falling under 180. And another caveat there would be just making sure viewers are aware that there's been audits, but there's not actual court cases. So when we look at the law, what we do as practitioners is the IRS has the code sections. We have to interpret them and understand what they mean. And then until there's a court case that puts in writing that this is how the government also interprets the law, there's nothing actually set in stone. So there's not a specific code section that says when you buy a farm, this is how you depreciate all the macro and micronutrients, and here's the specific useful lives.
But if you get to be the first court case, you can then do the R&D credit for the lawyers, right?
Yes. But there's some great deductions there that are possible. It's just making sure you're aware of.
So the information is still valuable.
Yes.
To have the report.
Yes.
Through that process.
Yes. I'd still look at it, but also know that you could be the example of the first person to go to court and understanding the tax implications that
Hannah's read the code. I could tell by her question.
Yeah, it doesn't, you would think, they really twisted that and ran with it to think that this should apply in this case. You know what I mean? So are you saying, Mackenzie, that you guys are more taking the stance that it's a 167 deduction and more of an intangible?
Yes.
Yeah.
Another number and another deduction.
Yes.
This is why you have CPA friends.
Can you get tax code on audiobooks?
Put you to sleep at night.
Yeah. Well, if I got to drive,
forget melatonin.
Hey, that might be healthier. long term.
Yeah, we've looked at it, and actually our firm's stance has changed over the years.
What,
we've done a lot
melatonin or the Section 180?
both. Just looking at what is the correct interpretation, and we've done extensive research trying to figure out. We used to say, let's look at the useful life of those assets. So let's look at what's the absorption rate of corn on these macronutrients, what's the absorption rate on beans for these, and look at how long, if you had a 50-50 crop rotation, how long would it take to use up those? So we looked at that. After further conversations and research, there's 2 new white papers that came out this year. We're now taking the stance of, are they really going to be useful if, let's say, it says it's going to be like 200 years before you use up potassium? Is that really going to be useful still 10 years from now? So taking a more middle of the ground approach of, we're not going to write it off in 1 year because that seems pretty extreme, but maybe 7 years is not such a bad thing, and pretty realistic and middle ground in the road until we know what the courts are going to say.
And I don't know how it reads, right? But as a farmer outside looking in, I mean, that ground is more valuable. I paid more for that ground because it had nutrients banked up rather than.
I mean, 100%. Like if you know that they've put hog manure on it every single year,
absolutely,
versus someone, your next door neighbor who has a year-to-year lease and they don't apply anything because they don't know if they're getting it back next year.
Yep.
You're 100%.
And on a year like this, where fertilizer is ridiculously priced and tariffs and all that stuff, I can lean hard on that banked up.
Right.
So just because it's banked up doesn't mean I have to use it, or maybe I will.
Yeah.
Right. Sometimes you take your money out of the bank. Sometimes you don't.
Right. I'm excited to see where it goes, especially as now biologicals are becoming a big thing out there as well, on what happens when they start looking or come up with a way to test on what are the bacteria in the soil and how do we measure that, and what do you need to apply with your pre-treatments to that soil, and can we capture that cost?
Yep. Yeah, we've been looking at some things that a lot of times the potassium and some of the nutrients in the soil are just so tightly held in the bonds of the chemistry of the soil that we can't get it. Some of those biological stuff will make that available.
Right. So if you can measure that on your farm, are you willing to pay more?
Yeah. Yep.
Well, I don't want to breeze right by that R&D credit or the R&E, according to Gemini. We may have to do a full show on that.
Yeah, I do. We've actually had a lot of requests on that, enough to do a show, and I think that it deserves 60 minutes or probably more.
Yeah.
So
if we're going to do that, we need to have that little 60-minute clock. I think that would be great.
Yep.
One thing in our past tax shows that we've done, both Hannah and Mackenzie, that has been beneficial is common mistakes that our listeners, and not our listeners, right? They're the best listeners, but that farmers have made that we should avoid making. Hannah, is there anything that pops to your mind of things that we've forgotten, didn't do, could have done better, that would have made your job easier?
Yeah. So I think one of the biggest things is to be sure you're tying out your balance sheet, right? If you're putting in your year-end loan balances, then you'll have a good interest expense deduction. Not all banks send those statements that show your interest expense. And so if you're not tying out your balance sheet, you're going to miss interest expense. Another big thing is, let's say someone buys equipment from AgDirect, right? They don't owe a payment for the whole next year. Meanwhile, they don't look at their depreciation schedules before they sign their tax return. There's no financial transaction to trace that this happened, right? So you get the tractor, the client isn't putting on their books, they're not increasing their assets, they're not making journal entries to debit equipment and to credit the new loan to AgDirect. So we don't know, unless we're actively working with them, making detailed notes when they talk about buying a tractor, or, there's a lot of firms where there's a team working on that tax return, either onshore, offshore, whatever. But unless the stuff is showing up in the books, the person prepping the return is not going to know about it. So oftentimes, when I take on a client, I review the prior 3-year returns. I ask for them, I review them, but ultimately I'm asking for them because of that Schedule J, right? Which we haven't really talked about yet, income averaging. Anyway, so looking at those prior year returns, I say, okay, I'm going to look at these. I need you to look at your depreciation schedule and tell me about these assets. I can't tell you how many times I've gotten a depreciation schedule and there's 20, 30-year-old cows and bulls on that depreciation schedule. You know what I mean? Like it just, so I think,
You should get an R&E credit for those bulls.
yeah. So I think the big thing is like a client to know where to look in their tax return to get the depreciation. Not all tax software kicks it out, but they can ask their accountant to just double check their depreciation, right? Accountants are happy to let you do it. You know, if you're emailing an accountant in October asking for depreciation schedules, it's probably because you're breaking up with them. So accountants, you know, that's also on their radar too. But yeah, I think clients reviewing that depreciation, and when I have a client and we pass off the tax return, right, they come in to pick it up, we go through depreciation. We're like, these are the assets, right? These are what we're taking. I think one thing that we talked about a little bit earlier, but I actually have a different approach than Mackenzie. She was talking about, you know, moving the March 1s to April 15th. I actually try and get those done in the fall because you can make elections, you know, 179 bonus, things like that on one year that play into now the next year, but we already kind of have a good pulse on how this next year is going to turn out, right? Like there have been cases where we'll plan to bonus something or section 179 and then change it, right? So section 179, let me back up. So bonus depreciation flows through and it can create a loss. You can, you know what I mean? Where section 179, if there's not income there, it gets trapped at the entity level or the individual level, right? And so there's times where we can, you know, a year that they didn't have a good year, but they had to buy new equipment. We'll actually section 179 that and let it stay trapped at the entity level. So then going forward, they have some section 179 expense to use. And 179 is great because it offsets ordinary income, but it also offsets self-employment tax, depending on how they have their entity structured. So oftentimes, you know, I try and extend clients and I tell them this behooves you. And it truly does, right? It's often in tax season. I mean, this last year, Colorado was a nightmare. We had March 1 filers, but Colorado didn't accept tax returns till March 21st. And so if we can just punt that, which is like a huge component of tax strategy, right? Like it takes all the emotions out of it. They already know the tax they're going to pay, but then they can kind of adjust it, you know, and we can play into this income averaging. You know, Mackenzie talked about 12% tax brackets. You'll often get clients that just don't know, right? So I'll get a client that comes in the door and they kind of have an idea of what they want to do for year end. And this prepaid feed expense is like through the roof, right? So I sit them down and I'm like, look, you've played this game the last 4 years. If we spike income this year, we can shove that back into prior year tax brackets and we can get you down to like an effective tax rate on 7% on this income. And they're like, so 7% tax. I'm like, yeah. So you pay the government 7 cents, you keep 93 cents and you keep it. You have that equity in your operation. You have that working capital. You know what I mean? Instead of always kicking this tax can down the road, which I think that's another case for Ambrook, right? Where you have enterprises, you can, especially like stocker feed or something that is very cyclical. You know, when those stockers, like you can't feed them forever. You know what I mean? So we can kind of structure when we're going to sell those to land in the right year. In the meantime, we're deducting feed. You know what I mean? Like there's just so much at play that you can do with farmers that no one else can do that, right? Like I can't prepay a ton of expenses for the next year. And if I can, then I'm prepaying what I'm going to use in the next 12 months as an accountant. Well, then I'm always going to have to do that, or there's going to be 1 year that it bites me. So farmers just have
last
year. Yeah. Like farmers just have such a big advantage there, right? And income averaging can also be when they sell cull cows, right? So if we've seen, you know, you have low income, now's a great time in the cattle market. Well, was depending on when this airs. You know what I mean? You could sell off a lot of cull cows. You're not paying self-employment tax on those, but then you're using up those prior year brackets, not paying a self-employed 15% tax on that. Like there are some huge tax opportunities on the table. And so I personally, if you need the tractor for the operation, we can talk about which year is the best year to buy that. But buying your way out of tax purely to buy your way out of tax, that just creates equity issues down the road. And that's not sustainable, right? I kind of have more insight on this. My husband's a ag banker. He has a fairly significant portfolio, but he's been in the industry for 15 years. So we kind of have some banter back and forth. He'll be like, as soon as a client brings me in QuickBooks, I throw that sucker in the trash or I shred it. Like, it means nothing, right? QuickBooks is open range, cage free, right? You'll have people that come in with their QuickBooks and they think because they posted some transactions, they're now an accountant. And it's like, you have stuff on the balance sheet that should be on the profit loss. You have all this, you just dumped it into open equity, hoping someone else will figure it out. You know what I mean? Yeah, you laugh because that's how it is. You know? And so I think the simple fix for most people is just to have the accountant do their bank statements, right? Well, and I think that's why we don't see accountants converting to something like Ambrook, right? The accounting world is super interesting right now when we have this private equity and other things and offshoring work. But essentially, if an accountant can pay their staff $25 an hour, but then they're billing the client 3-4x that to have their books posted, you know what I mean? Like, I think it would just so disrupt how accounting businesses work that they're unwilling to see a new software, right? Never mind the fact that most partners, most people that have power in accounting firms, they're beyond capacity. The last thing they have time for is to book a demo with a software company. You know what I mean? So I think that's why Ambrook, you don't hear a lot of it. In accountants, like at this ag mentors group that we talked about, a lot of the accountants were like, yeah, but actually look at them. They're not ag. They're also into construction. They're also into trucking. You know what I mean? But it's because often ag operators are in many enterprises, right? They might do some trucking on the side. They might do some custom hire on the side. And so what I love about Ambrook is they see a pain point for their customer and they figure out how to ease the pain point, right? It was not born to be like financial software. It wasn't created by accountants. It was created because people needed solid financial statements to work with the FSA, to get grants with USDA. You know what I mean? And so I think that's what I like is that the background to Ambrook is they saw a problem, they created a solution, and they keep creating a solution, right?
Yeah, that is something that, we got very clearly out of the interview with the owner when she talked about her background and how she even got into this, which was really neat. I jotted down 2 things while you were chatting there. The first one is I resisted the urge when she said that you can't just go buy a tractor to take care of this. And I was getting ready to tell her to shut her mouth. That's what everybody does. We're not going to change the way we do things.
We like tractors. Okay?
We like our tractors.
Sure.
But secondly, Mackenzie, I want to ask you a follow-up question on her suggestion, because to clarify for our listeners, when she said move them to November, she's not talking about the November before the end of the year. She's talking about extending to the following November or October,
yes.
Whatever that is. Do you have to have an excuse to extend, or can anybody extend?
No. And to clarify too, earlier when I had said that we move them to April 15th, most of them, if we're doing a 115 extension, we're moving them out to the summer months. So June, July, August.
Yeah.
If you have a business return, it's due September 15th. Individual returns are due October 15th. So we try to get them done before 9/15 when you all start field work.
Yeah.
So we try to get you done then. But 100% agree. We're on the same strategy of we're going to try to get most of our clients to do that for the same exact reasons Hannah just said. I have most of my large farmers we're working on over the summer months and also doing planning for the next 2 years in the summer months at the same time. So we can say, okay, but previously we thought we were going to write off some of this combine to offset this grain you brought in to reduce your carryover inventory. But now we've got this going on in 2026. So we can actually back off some of that or do some different tax strategies. Extending us further out allows us to make those changes and look at you more holistically. So when we do planning for clients, I'm looking at where have you been, where are you now, and where are you going in the next few years? And that's one of the most critical things people should be looking at is not how do I get my tax to 0 this year or a number I'm comfortable with. It's where am I going in 5 years? Where am I going in 10 years? And let's plan today to make sure we don't have the highs and lows and end up paying 37% tax when we could have paid 12% tax on that income.
Interesting.
Exactly.
I think we've never shared that perspective.
Right.
Yeah. Also, with that, and I'm sure Mackenzie will agree, I really want to get to know her more. I really am
Yes,
liking
I
how
feel like
she
we're the same
operates.
person, Hannah. So we need to connect, and I'll put my list on the
Well,
next Egg Mentors group.
That's what Farm for Profit does. We're connecting people across the country.
Yes.
Yeah.
I
But
got a question
also
on
in
that.
I just want one little tidbit on this income averaging thing, right? Instead of keeping income every year, like if you keep it in that 12% and then you're also paying self-employment tax on it, you're essentially just paying way too much self-employment tax, right? You keep it low for years, then you spike and just max the self-employment tax 1 year rather than paying, $100,000 of income, 15% on $100,000 for 3 years, kind of save it, bump it. You know what I mean?
Yes.
There's just so much to do with ag.
There is. And then also now with the new rule on equipment trade. So previously, sorry, we're kind of leaving you guys out of the conversation.
I told you before we
Honestly, should just
started.
let you guys just go at it.
I think it would have been a better show.
But with the new equipment rules, so previously, before the Tax Cuts and Jobs Act, when you traded equipment, you didn't have to recognize the gain on the piece you traded in, and you could write off just the trade difference. Well, now with Tax Cuts and Jobs Act, you're paying tax on the trade-in value and then depreciating the full cost of the new piece. So with that, there's a lot of strategy there, especially with farm income averaging, that third year you trade in a lot of equipment and have a lot of 4797 ordinary income that's not subject to self-employment tax, and maybe your farm breaks even, but you're able to average back and not have the self-employment tax on that income also is another strategy to use.
So I know this is over my head to an extent, and I know this is going to be over the head of our listeners as well, which is why it's important to have CPA partners that you can trust.
Yes.
CPA partners that are either all partners in their firm work in agriculture or majority of their partners in their firm work in agriculture is why it's important to develop those relationships. And if your CPA has a stroke, seek options.
God, it is nerve-wracking. I mean, it's like changing banks, right? It's just I'm sure you guys would say it's a lot easier than you think. Just give me your 3 years of time. But man, as the person, like, man, it's nervous. It makes me.
Well, you want
gives
to
me
have the
anxiety,
relationship. You need
right?
the relationship because, like, if I don't have a relationship with you, I don't know what you've got going on in your life, and
Right.
I could be creating a horrible tax plan for where
Yeah.
you're going in your life. So, it is a lot of relationship building, that getting to know each other on a personal level, so hey, you had a kid this year, and let's plan for that. And all of the different
he's
things.
going to make that happen because of the
Yes.
Trump accounts.
I mean, how often should we be meeting with our CPA throughout the year?
A couple times at a minimum.
At a minimum. Okay. I had a question on that March 1st thing.
Yeah.
A lot of our listeners most of them are farmers,
Yep.
but a lot of them have off-farm income. Maybe they go work at a job in town. At what point are you a farmer with the Schedule F, or what point are you filing on April 15th?
So there's very specific guidelines on what's included as farm income and what is not, and you have to have 2/3 of your gross receipts as farm income.
2/3 gross.
Gross.
Yes.
Gross. Ouch.
Gross.
shouldn't
That
be hard,
actually
just-
makes it way easier,
Yeah, I was
right?
gonna say that shouldn't be hard
Yeah.
as a farmer because
If you wanted to be a farmer,
right.
if you wanted to file as a farmer rather than file, I see where you're going.
Yes.
You just have to be careful, like if you have a Farm C Corp and a lot of your 1040 income comes from your W-2,
Mhm.
that doesn't qualify.
Okay. Good to know. I don't know which is better to be on. Probably on the farm side of things. You get
I mean, if you're doing active planning, it shouldn't really matter either
Yeah,
way.
right.
It's when you pay your tax and
Mhm.
knowing what that tax is going to be and planning around that.
I'm just sitting back here laughing in my head, knowing the number of LinkedIn DMs you're going to get that everybody that does taxes knows your accountant had a stroke.
Yeah, hit that out. I get way too many LinkedIn's as it is.
All right, ladies, we've hammered this and hammered on it for a while, and I'm so glad we discovered what I'm going to call now a duo. I think there's going to be multiple connections of this, especially since it sounds like y'all get along.
Yeah.
And we probably the next one, Corey and I will put our feet up on the desk and say, what do we need to know?
Yeah. Well, it sounds like maybe we need to be having a tax episode not just at the end of the year,
Ah,
right? Because there's just
100%.
no physical way to cover. Like, obviously, we've missed a lot. Like,
Yeah.
this is not a, get all your tax decisions made in one episode. And by the way, this is just a show, and this is our opinions. Do not take this as legal advice.
I think that yes, especially I hear a lot of or some farmers saying now, like, the markets suck. They're taking care of my tax planning for me. Well, right now is the most crucial time to do your tax planning. You can strategize so much in the low years on, do we eat up some of that inventory you've been carrying over every year, or do we not prepay as much? Or how can we make sure that we're utilizing this and not generating a large net operating loss to carry forward? And then you're going to pay double self-employment tax in the long run. Having an NOL is not a tax strategy, and making sure people are aware of that and planning accordingly.
Yeah.
Well, I couldn't have said it better myself.
So before we let you guys go, how do people start working with you, Hannah? What's the best way to get in contact with you? And then we'll go to Mackenzie.
Yeah, so I have an intake form on my website. That's kind of typically how people find me. Honestly, for the most part, it's been word of mouth, but the people that have gotten a hold of my email since I've been involved with Ambrook, like needing someone to like show them the ropes, and Ambrook is a great company, right? But then there's some people, some of them have even been on your show. And so I'm like, I'm going to get to know them before I hop on a call. And so I've watched your show, and I'm like, I just need to get a feel for them. But yeah, I think the big thing to know is that like there are accountants out here like Mackenzie's firm, that really do understand their situation, share values with them, right? We come from ag, Mackenzie comes from ag. And so I think, some of us were in the FFA. So
Yeah.
I can't see your background, so I can't see if your jacket's still there.
It's over here, yeah.
Okay.
It looks a
Okay.
little
I was like,
smaller than what?
I
yeah.
can still zip it up.
Anyway, I think it's all about having that relationship, right? Just like Mackenzie talked about, meet with your accountant, but also I'm sure she will say the same. Like,
You got my tie.
we're partners, right? We know our clients on a first name basis. Often their banker knows us on a first name basis. Their attorney knows us. And so I think taking like a multi-year strategy with also a team approach, like, I just think that's such a winning combo, but also the client owning their books,
Very good. Mackenzie?
So yeah, we're similar. We have a little button on our website called Let's Collaborate. So LattaHarris.com. If you fill out that form, I'm actually our chief client officer. So I review all the intake forms, and we have a lot of questions on there trying to narrow down. If you just want a tax return, we're not the place for you. We want to add value to your operation. We want to help you make strategic decisions. And so our intake form actually narrows down a lot of that on, are you willing to extend? Because we would like to partner with you, not when we're our busiest, and actually take time to get to know you and your operation and make the best strategic decisions. Are you open to electronic communication? Do you tie out your books in a QuickBooks or Ambrook or some type of software as a start from an Excel spreadsheet that doesn't reconcile?
It reconciles. It's just upside down, apparently.
So, trying to narrow down to make sure, as there's an accounting shortage across the U.S. right now, we're getting an influx of people wanting to work with us as well. And so trying to make sure we're the right partner for you and you're the right partner for us, and have that collaborative relationship.
That's great. Well, thank you to the both of you. Also, thanks to LattaHarris and Ambrook for allowing the two of you to come here, and really should have been the two of you, and Corey and I just shut up.
Yep.
So our pleasure. Thanks again for having you, listeners. We always appreciate you. So next time, have a good one.
Farm4Profit Podcast. Take a listen, have a blast. Farm4Profit Podcast.